You walk into a bank, deposit $1,000, check your account a few minutes later. The money is there. Simple. But have you ever wondered what actually happens next? Does your cash sit inside a vault waiting for you to withdraw it? Or does the bank do something else with your money? The answer reveals one of the most important hidden systems powering the modern economy. Most people think banks simply store money, but that's only a small part of what they do. Banks are financial intermediaries. Their job is to connect people who have money with people who need money. Every day, banks manage trillions of dollars flowing through the economy. And it all starts with deposits. So let's follow the journey of your money after it enters the banking system. When you deposit money, whether it's cash, a check, or an electronic transfer, the bank records the transaction in its systems. Your account balance increases. You can see the money in your account. But here's the important part. The bank doesn't necessarily place your exact bills into a separate box with your name on it. Instead, your deposit becomes part of a much larger pool of funds managed by the bank. Your balance is essentially a record showing how much the bank owes you. This surprises many people. Banks typically do not keep every deposited dollar sitting idle in a vault. If they did, they wouldn't earn much money. Instead, banks keep enough cash and reserves to meet normal withdrawal demands. The remaining funds may be used to support activities such as home mortgages, business loans, car loans, credit card lending. This process helps money circulate throughout the economy. Your deposit can indirectly help finance homes, businesses, and investments. Without this system, economic growth would be much slower. Today, most money never physically moves. When you transfer funds or make a purchase, computers update balances electronically. Banks communicate through secure payment networks that process enormous numbers of transactions every second. When you swipe a debit card, send money online, or pay a bill, multiple financial systems work together almost instantly. What looks like a simple transaction is actually part of a vast digital infrastructure connecting banks worldwide. Of course, none of this matters if people don't trust banks. That's why banks invest heavily in security. They use encryption fraud detection systems, secure data centers, identity verification, regulatory oversight. Most countries also have systems designed to protect customer deposits up to certain limits if a bank fails. These protections help maintain confidence in the banking system. Because without trust, the entire system would struggle to function. 100 years ago, banking involved paper records, physical cash, and long processing times. Today, money can move across the world in seconds. Millions of deposits, transfers, purchases, and withdrawals happen every minute. Most people never see the technology behind it. But modern banking relies on enormous networks of computers, payment processors, regulators, and financial institutions working together around the clock. The next time you deposit money into a bank, remember, your money isn't simply sitting in a vault. It's part of a vast financial system that helps power businesses, fund homes, support investments, and keep the economy moving. It's one of the most important hidden systems in modern life. And most people never think about it. If you enjoyed learning about the hidden systems that keep the world running, subscribe to Behind the City World. We uncover the infrastructure, technology, and systems behind everyday life. Thanks for watching.